What if I told you the US government has already chosen how it will erase $37 trillion in national debt? And almost no one has noticed it happening? Not Congress, not the media, not even most economists. Because the plan isn't to pay it back. It's to make the debt disappear quietly, strategically, and in a way that transfers the cost to every single person holding dollars, including you. And here's the terrifying part. This isn't the first time an empire has pulled this off. Rome did it with silver. Britain did it with gold. And now the United States is preparing to do it with something far more dangerous. A silent reset disguised as innovation. A reset powered by crypto, gold, and a currency system most people don't even realize is already changing beneath their feet. To understand how America reached a point where wiping out its debt is easier than paying it, you have to go back decades, back to the moment the US dollar became the most powerful financial weapon on Earth. In 1944, when the world was rebuilding after World War II, the US made a deal that shaped the next century. A deal at Bretton Woods that crowned the dollar as the world's reserve currency, a position no country had ever held with such dominance. Every major currency would be tied to the dollar, and the dollar itself would be tied to gold. For a while, this system created stability, prosperity, and trust. But beneath the surface, something else was happening. Something few leaders fully understood at the time. A reserve currency is like a credit card with no spending limit. And the US used it exactly like that. Wars were funded, programs were expanded. Debt was created, massive, unstoppable, compounding debt. And because the world needed dollars, the US could print as many as it wanted without immediate consequences. But eventually, consequences arrive. Always, by the late 1960s, other nations began to realize the truth. America was printing more dollars than it had gold to back them. Confidence cracked. Countries demanded their gold back. And in 1971, the world changed forever. President Nixon ended the dollar's gold backing, turning the US currency into something new, something dangerous. Money backed by nothing except trust, and trust is fragile. For decades, the US exploited this system to borrow, spend, and expand its influence across the world. But today, the bill has come due. $37 trillion in debt, rising interest payments. A currency losing purchasing power. A global economy slowly shifting away from the dollar. And now the United States is facing the same question every empire eventually confronts. What do you do when your debt becomes impossible to pay? The answer is simple. You don't pay it, you erase it. But how do you erase debt without triggering panic, collapse, or global backlash? That's where the real story begins, with crypto, with gold, and with a monetary reset happening in slow motion. To understand how the United States ended up on the edge of the largest financial reset in modern history, you must understand the mechanism that made this crisis unavoidable: compound debt. The moment the dollar was detached from gold in 1971, money was no longer limited by metal, but by political will. And political will is always tempted by the path of least resistance. Instead of raising taxes or cutting spending, the US discovered a simpler solution to every economic problem: print more money, borrow more money, expand the system, and repeat the cycle. Every recession meant stimulus. Every crisis meant quantitative easing. Every war meant debt financing. Every political promise was funded by borrowing now and worrying later. It worked because the consequences did not appear immediately. Inflation was slow, debt looked manageable, and global demand for dollars made borrowing feel free. But debt doesn't grow in a straight line. It grows exponentially, quietly, until one day the curve turns vertical. That vertical moment is where the United States stands today. For decades, America used the dollar's reserve currency power to reshape global economics. Countries needed dollars for trade, banks used dollars for settlements. Oil and commodities were priced in dollars. Nations saved in US treasuries. This global dependence created what economists call the exorbitant privilege: the ability to borrow at near zero cost and print without limit. Inflation could be exported to the world. The US could run deficits without fear. And with time, this privilege turned into complacency. Debt no longer felt dangerous. Spending no longer felt risky. Everything seemed manageable as long as the world trusted the dollar. But trust, like any currency, eventually weakens. The real breaking point began when interest rates rose. For decades, the Federal Reserve kept rates artificially low, making debt cheap. But when inflation surged, the Fed was forced to increase rates, and suddenly the interest on the national debt exploded. Not the debt itself, just the interest. In 2020, the U.S. spent around $345 billion on interest. By 2023, it was more than $900 billion. By 2024 to 2025, interest payments surpassed U.S. defense spending. America now spends more on interest than on its entire military, more than on veterans, more than on education, more than on transportation, more than on science and technology combined. Once a nation reaches this stage, its options collapse. You cannot pay it, you cannot cut enough programs, you cannot raise taxes enough. The only option left is the same option every empire ultimately chooses: make the debt worth less. Not by defaulting, but by devaluing the currency. Currency devaluation is the oldest trick in imperial history. Rome did it by reducing silver in its coins. Spain flooded Europe with New World gold. Britain devalued the pound after World War II. America uses inflation, but this time, something far more sophisticated is happening. In a digital age, traditional devaluation would be too obvious and too destabilizing. Instead, the US is preparing a controlled, engineered, technologically masked devaluation. The clues are everywhere: rapid approval of Bitcoin ETFs, quiet gold accumulation, whispers of gold-backed settlement tokens, development of a digital dollar, regulatory pressure on stablecoins, global discussions about modernizing the financial system, and declining trust in traditional bonds. None of this is random. It is the blueprint of a reset. The US has already attempted every conventional solution, and all failed. Cutting spending is impossible because politically powerful programs cannot be touched. Raising taxes is too slow and too small. Defaulting is unthinkable because it would collapse global trust. Printing more money only fuels inflation. Lowering interest rates would restart inflation. When every traditional fix fails, a reset is the only path left. And resets follow a predictable pattern: inflate debt away, introduce a new monetary system, revalue hard assets, restructure obligations, and present the reset as modernization instead of collapse. That is exactly what we see unfolding. If you look around the world, the pattern becomes even clearer. China is stockpiling gold at the fastest rate in its history. Russia has nearly eliminated the dollar from its reserves. Saudi Arabia is considering accepting yuan for oil. BRICS nations are working on a commodity-backed currency. Europe is testing digital currencies, and the United States, the largest debtor in world history, is quietly embracing crypto products, adding to gold reserves, and building the infrastructure for a digital dollar. Most people think crypto and gold threaten the dollar. But the truth is the opposite. The US needs crypto and gold to reset the dollar without destroying it. How they plan to use these assets, why they are critical to the coming reset, and what the new system will look like is the next step of this story. To understand how crypto and gold become central tools in a debt reset, you first need to understand what a reset actually is. Most people imagine a reset as a dramatic collapse, a sudden announcement, or a catastrophic event. But in reality, the most effective resets in history are slow, calculated, and disguised as progress. They happen while people are busy, distracted, or divided. They happen through reforms, modernization, and upgrades. And by the time the public realizes what changed, the old system is already gone. The United States cannot erase $37 trillion in debt with honesty, because honesty would destroy the very power structure that keeps the dollar alive. But it can erase the debt through obfuscation by shifting to a new monetary framework where the old debt becomes irrelevant, diluted, or quietly revalued. This is where crypto, gold, and digital currencies create an opportunity that never existed before. They offer a way to transform the system without declaring bankruptcy. They allow the government to create distance between the old dollar and the new dollar. And that distance is where the debt disappears. Over the last decade, crypto has gone from a fringe experiment to a trillion-dollar asset class. And while it's often presented as a threat to the US financial system, something far more interesting is happening. The US government is slowly pulling crypto into the regulatory perimeter. First through taxation, then through enforcement, then through cooperation, and finally through approval. Bitcoin ETFs were not approved to support retail investors. They were approved because the government needed a way to integrate crypto into the existing financial system before the reset. A completely decentralized ecosystem cannot be controlled. But a regulated, custodian-dependent crypto infrastructure can be absorbed, monitored, and eventually used as part of the digital dollar launch. At the same time, gold is making a comeback. For decades, gold was dismissed as outdated, slow, inconvenient, and irrelevant in a digital economy. But if gold were truly irrelevant, the most powerful nations in the world would not be hoarding it at record speed. Central banks have been buying gold at levels not seen since the 1960s. The U.S. military has increased protection around domestic gold reserves. And global institutions are quietly discussing gold's role in future settlement layers. Gold will not directly back the everyday dollar you hold, but it may back the institutional dollar, the dollar used for global settlements, sovereign transfers, and commodity exchanges. This creates a two-layer system, a retail dollar that continues to inflate, and a settlement dollar that retains hard asset backing. This model allows the U.S. to keep internal inflation high enough to erode debt while preserving international credibility. But even gold alone cannot create a smooth reset. The real innovation is the digital infrastructure forming underneath the system. The U.S. is building a central bank digital currency. Not officially, not publicly, but undeniably. Federal Reserve officials have already confirmed pilot programs. Large commercial banks are testing tokenized deposits. Major payment processors are preparing programmable settlement channels. And the U.S. Treasury has already begun working on blockchain-based issuance systems. A digital dollar is coming not because it's a technological upgrade, but because it allows the government to conduct a controlled devaluation without the chaos of a traditional collapse. When a digital dollar launches, it creates a moment where the government can adjust values, reset obligations, or introduce new rules in a way the public will accept. The message will be about innovation, efficiency, fraud prevention, financial inclusion, and modernization. But beneath the surface, the architecture allows something far more impactful, a hidden redenomination. Your old dollars can be converted to new dollars. The conversion can include incentives, premiums, penalties, or expirations. And within the conversion window, the government can reprice the entire system. This is where crypto and gold become essential. Because when the government introduces the digital dollar, it needs anchors to justify the shift. Bitcoin is already seen as digital gold. Ethereum and stablecoins already form a shadow payment system. Hard assets like gold, Bitcoin, and tokenized commodities give the new dollar a narrative of strength. They serve as proof that the reset is not a collapse, but an evolution. The government can say the new dollar is integrated into modern financial rails, backed by transparent blockchain settlement, and supported by commodity reserves. In reality, what's being backed is trust, not value. But trust is the only thing a reserve currency truly needs. The reset will likely unfold in phases. First, inflation stretches the old dollar to its limit, devaluing the debt in real terms. Next, crypto and tokenized assets gain legitimacy, establishing the new architecture. Then, a digital dollar is introduced through a coordinated national rollout. Finally, a reevaluation of U.S. assets, reserves, and obligations occurs. And somewhere in that sequence, the $37 trillion debt is effectively erased either through inflation, conversion, maturity restructuring, or repricing. But here's the most important part: the government will never call it a reset. They will never admit the debt was wiped out. They will never announce a loss of value. They will use different language: economic transition, currency modernization, financial evolution, technological transformation, or system upgrade. And most people will accept the narrative because the alternative is far more terrifying. Every major empire in the past used a similar playbook. Rome diluted its coins slowly until their silver content was nearly worthless. The people knew something was happening, but didn't understand the scale until it was too late. Britain devalued the pound gradually through post-war inflation, then through international realignment, and finally through quiet reevaluations that permanently reduced the value of savings. Spain flooded Europe with gold, secretly raising domestic prices while keeping the facade of wealth alive. And the United States is now preparing its own version, using tools those empires could only dream of. The technology may be new, but the pattern is ancient. Every empire that reaches excessive debt eventually uses devaluation to survive. Every empire disguises the devaluation as progress. And every empire convinces its citizens that nothing is wrong until the reset is complete. The United States is following the same pattern, but with a modern twist: crypto rails, gold reserves, digital dollars, and a global financial network more interconnected than anything in history. The question is not whether the reset will happen. The question is who will understand it early enough to protect themselves. Because resets do not destroy everyone equally. Some people lose everything: wages, savings, pensions, purchasing power. Others rise: those who understand the pattern, who hold scarce assets, who position themselves before the shift. And in every historical reset, the people who saw it coming were not the elites or the insiders, they were the observers, the thinkers, the ones who paid attention to patterns that others ignored. Right now, the US is making moves most people don't see. But once you understand the pattern, the direction becomes impossible to ignore. And now, we arrive at the part nobody is prepared for. The phase where the US doesn't just influence the global monetary system, it rebuilds it, reshapes it, and quietly ensures that the cost of this transformation is paid, not by the government, but by everyone using dollars. Because here's the brutal economic truth: a government with too much debt has only three ways out: default, austerity, or inflation, but default destroys trust. Austerity destroys political careers, and inflation, well, inflation destroys savings, purchasing power, and middle-class wealth, quietly, silently, without protests, without riots, without headlines. Inflation is the perfect weapon, the perfect tool, the perfect escape. And right now, it's being deployed with precision. A currency losing strength on purpose over the last decade, the US hasn't simply allowed inflation. It has engineered it, encouraged it, even justified it as normal, temporary, healthy, and necessary. But you and I know what's really happening. When the government prints money, it buys time. But when the public loses purchasing power, it buys the bill. So the debt doesn't disappear, it simply gets transferred. From Washington to you, from the dollar to real assets, from savers to the system. And the next phase will make this transfer permanent. The coming gold revaluation: gold was never removed from the system. It was simply pushed behind the curtain. Central banks still hoard it, measure it, protect it, add to it whenever the global economy shows cracks. And today, cracks are everywhere. China is buying gold. Russia is buying gold. Turkey, India, even small nations that never cared before, are suddenly stocking up. Why? Because every major economy understands the same rule. When fiat currencies weaken, gold becomes the anchor. But the US isn't buying gold like other nations. It's doing something far more powerful: it's preparing to reprice it. A quiet, strategic revaluation, where the price of gold skyrockets. Not as a market event, but as an intentional reset tool that allows the US to shrink the real weight of its debt. Think about it: if your currency gets weaker, and gold gets more expensive, everything measured in dollars shifts, assets rise, debt shrinks. And the government gets exactly what it wants: a smaller, easier to manage mountain of obligations. This isn't prediction, it's pattern. Repeated across empires, again and again, for thousands of years, and the US is now following the script line by line. The crypto integration nobody saw coming. Meanwhile, on the digital front, a different reset mechanism is forming: CBDCs, regulated crypto, tokenized assets, blockchain-based treasuries, and real-time settlement systems. Most people think CBDCs are about technology, or efficiency, or faster payments, but the real purpose is control, precision, programmability, and most importantly, the ability to manage inflation and currency supply with surgical accuracy. In the old system, inflation happens after printing. In the new system, inflation can be engineered instantly, directly, mathematically. Imagine a future where stimulus isn't mailed. It's uploaded, where interest rates aren't blunt tools. They are digital levers. Where taxation isn't delayed, it's automated. Where spending isn't monitored, it's shaped. This isn't speculation. This is the direction every major economy is moving toward. And the US, despite appearing slow, is already building the infrastructure, piece by piece, because a programmable dollar solves the government's biggest problem. How do you erase debt without a crisis? You control the currency, digitally, directly, with no resistance. The endgame, a controlled reset, put all the pieces together, a weakening dollar, a strengthening gold standard in the background, a digital currency system rising in the foreground, foreign nations reducing dependency on the US, and global inflation acting as a stealth tax. What does it spell? A monetary reset, not sudden, not chaotic, not dramatic, slow, strategic, invisible, a transformation so carefully executed that most people won't understand what happened until it's already over. And in this new system, the dollar will not disappear. It will evolve, transform, and re-emerge with new rules, rules that serve the government's survival above all else. A reset where your savings buy less, your cash loses value, your costs rise, your wages fall behind, your financial freedom tightens, while the government's debt quietly evaporates. Modern parallels, patterns never lie. Look around the world, look at history, look at the data. Every empire that reached extreme debt levels chose the same path: inflate, devalue, reset, repeat. Rome cut its silver coins. Spain debased its currency. Britain abandoned gold. Argentina freezes bank accounts. China controls capital. The US simply has better branding, a more sophisticated system, more global leverage. But it's playing the same game, and the $37 trillion problem isn't a roadblock. It's the excuse, the justification, the narrative for the reset they wanted to make anyway. The fallout: what happens to the average person when currencies reset? People feel it long before they understand it. Prices rise and never return. Savings stretch thinner every year. Jobs pay more but buy less. Rent climbs, food climbs, energy climbs, assets become unaffordable. Debt becomes normal, and inequality widens like a fracture. Not by accident, by design, because a fragile population is easier to steer, and a digital currency system is easier to control. This is the world forming beneath your feet. A world where money itself behaves differently. A world where financial power shifts from citizens to systems. A world where the only people protected are those who position themselves early. Your 3 core takeaways. Takeaway number 1. The US will not pay back its $37 trillion debt. It will erase it through inflation, devaluation, and monetary restructuring, just like every empire before it. Takeaway number 2. Crypto, gold, and digital currencies aren't separate trends. They are the tools of the coming reset. One analog, one digital, one programmable. Takeaway number 3. The people who survive economic transitions are the ones who understand them early, before they show up in the news, before the masses panic, and before the system rewrites the rules. A final warning: the reset will not be announced. It will not be televised. It will not be explained. It will unfold slowly, quietly, and then suddenly. And when people finally ask, what happened to the dollar? What happened to my savings? What happened to the economy? The answer will be simple: you weren't meant to notice. If you want to understand the deeper patterns behind this reset, the historical cycles, the hidden signals, the playbook every empire follows, then subscribe to the channel. Because what's coming next is bigger than a debt crisis, bigger than inflation, bigger than crypto or gold. It's the transformation of money itself, and you deserve to see it before it happens.